Well, let's invite the expert. Aditya Narain, Head of Research, Institutional Equities, Edelweiss Securities, joins us. This is a question we get asked all the time, and this is the question we ask all our experts, Aditya. Last 7 days, every single day we are scoring a new high. Should one still go out and put fresh money? People like us get a salary at the end of the month. Do you still go and put it in equities?
I think the kind of money and the kind of market performance that you've seen of late is quite honestly quite unprecedented, right? And while there's nothing in the very near term which is saying this will stop quickly, I think just the fact that you've moved so much, so quickly, and so consistently would fundamentally should put in some caution in terms of how much more money, if anyone, puts in at this point in time.
Aditya, so is that a yes or a no?
Well, okay. I thought I was being a little subtle and balanced about it. I'd say I would not put in money.
A little cryptic.
Sorry. I thought I was being, as I said, subtle. I wouldn't put in too much at this point in time, simply because, if you've been there, you've already done very well. You're coming to that time of the year when, things tend to be a little sluggish. I think most global markets are literally closed for the next 2 weeks. It's been a great run. So I don't think you need to keep chasing it at this point in time. As I said, I don't think you're necessarily seeing anything that will break this flow momentum. But the reality is stocks have moved very substantially. There's been breadth of movement. Anyone who's been in the markets has done very well. If someone hasn't been in the market, then I'd probably just sit out a little bit.
Okay. Well, Aditya, I'm going to present another news that came in after market hours on Friday. Reliance Industries. There's yet another news that they have struck gas. But for the details, Sonal is waiting by. Sonal, just fill us in.
Well, it's a significant news, Lata. It is about the upstream segment of the company, which is not spoken about so much. So the company has announced start of production from their R cluster block in the KG D6 basin. It has 3 deep water gas blocks named R cluster, satellite cluster, and MJ. And R cluster is the first deep water gas segment that has started commercial production as per company. Now remember, these 3 clusters are expected to meet 15% of India's gas demand as per the company and 25% of domestic production. Already India is dependent on around 50% in terms of imports on the gas consumption that stands at 150 MMSCMD. So this will be a significant contribution to overall energy economy as well. Company says the next project, that is satellite cluster, will come on stream in 2021 and the third one will come on stream in 2022, and all 3 of them will contribute around MMSCMD in terms of production. Reliance Industries here has a participating interest of 67%. British Petroleum has around 33%. And this is one segment in the overall enterprise value. It is actually negative. The analysts in fact had written it off. So if production starts coming in, it will be a big EV boost for Reliance as well. And overall, since they say that 25% of domestic gas production is something that they will contribute, it will be a big significant production addition that Reliance Industries will do.
Okay, thanks a lot for that, Sonal. So Aditya, this is a question on perhaps 15% of the market, Reliance. After hitting all those highs in October, was it? 2,300 rupees and stuff like that. It's come off a good 20%. Now, do you think it deserves a look in? It has not participated in the higher highs since November.
See, I think if you were to really look at it from a 12-month perspective, it's done very, very well. In fact, If anything, it is the stock that really led this market up on the trajectory that you've fundamentally seen all this while, right? Is this gas good news for it? I don't know the extent of it. I haven't been able to quantify it in any manner. But I think such news typically in an environment like this, when a stock has lagged, does tend to provide you a certain amount of support. Our overall view on the stock, though, is a neutral, because at some level, I think a lot of the good news had got factored in. I think you've reached a stage where the deleveraging play had actually already come through, and you're looking for delivery from a lot of the tech initiatives. So I would tend to believe that this itself will probably be a little bit of a boost. But, in the context of the last 12 months, it's actually outperformed very, very significantly. And so to that extent, it's not natural that that's going to lead the next leg from here.
Aditya, the other space which I just want to put to you is the entire real estate space, and not just real estate, but housing finance, mortgage finance companies, and now the action which is spreading to building materials as well. What is your sense? We all read the registration data for big cities like Mumbai, very strong numbers so far this month. November was strong as well. Are we starting a new cycle really based on very low interest rates, or you think, the hype is a bit overdone?
I think the very good thing that is coming through is really volumes. The fact that you've got very supportive interest rates, and the fact that you've had some policy initiatives in terms of duty rate cuts. I think that actually is a very, very good mix. I would tend to believe what you should get, what you should expect, is that volume momentum stays relatively high, which is fundamentally very good, and which has a spreading effect, whether it is housing finance companies or building materials. Where I just sit back a little bit is in terms of whether you're going to get in the early stages, the price escalation that sometimes these stocks might start extrapolating, which I think might take a little bit longer to come through. I think the reason that some of the demand is coming through is because prices are fundamentally a little low. So, from our portfolio stance perspective, we've actually been running an overweight on the real estate space for some of these reasons. We would continue to stay with it. So to that extent, we would remain relatively positive. Volumes are very, very important. I'd be surprised if prices were to come through in a very supportive manner. If you start seeing signs of that, then you could actually set yourself up for a much longer and a much sharper cycle. But I'd wait out on that. I'd be much more confident of volumes, where I think things have started rolling, and that's actually quite a big positive.
Okay. Well, I want to now come to the winner of the week, which was, surprise, IT. Accenture's blockbuster numbers and even more blockbuster guidance. You think that's a good safe haven at a time when money is coming and you want to park it somewhere?
So I think two things. Firstly, for us, it wasn't that much of a surprise. We've spoken in the past. That's a theme that we are running very aggressively. And we think we're at the early stages of really a multi-year run through, right? So to that extent, it's not been a surprise for us. We are running a massive overweight on it. And we do believe that these data points will consistently come through. So far, there are some skeptics, both in the businesses and in the markets. But I think you're seeing the first signs of consistent good numbers where guidances are also being raised. I think to your second point, I think that makes it even more attractive in terms of the defensiveness of this space, given the context that the markets have run up a lot and that there has been a lot of liquidity. And for a lot of sectors, the demand outlook, while looking good at this point in time, doesn't necessarily have the sustainability into the next year that stock prices are factoring in. Those could be at a certain level of risk. As far as the IT space is concerned, we don't think so. We actually think the demand environment will only get better. There will be better recognition of that. So quite honestly, almost irrespective of markets, we think IT is a very strong space to be in, simply because the underlying is very good. And so to that extent, this last week's performance hasn't surprised us that much, even though, of course, it is lynched on, some data points coming through.
Okay. Well, we'll leave it at that. Aditya Narain, always a pleasure having you with us on the channel. Have a great weekend and a great 2021 if we don't speak before the year end.
You too. Thanks.
Thanks. Okay, let's leave you with another big voice from the markets, Neelkant Mishra.